We are seeing a lot of adding to Tesla positions from hedge funds and institutions coming through on the newswire here on this Sunday afternoon. Now, why are analysts so pessimistic about Tesla's rally recently? Last week, we seen 3 downgrades alone. But why is the option activity for this Friday have the largest amount of open interest and volume at the $300 strike to the call side? What does all of this mean? How do you break this down, and what should you take out of it? We'll talk about it. There's also a lot of economic data coming out this week. You hear from Fed Jerome Powell twice. You get personal spending, personal income, PCE data, the S&P Case-Shiller Home Price Index, and much more. And I think we need to break that down as well. But in other news, Mark Zuckerberg's MMA coach says he's not sure that Mark Zuckerberg would beat Elon Musk in a fight. We have all of this and much more for you to kick off your starting day of the new trading week, which will be tomorrow. So let's get into it. If you guys find value out of this video, if you want to stay up to date with everything happening in our markets, you want to make more money, you want to reach financial freedom as quickly as possible, subscribe to the channel and hit that like button. So I want to start this video with giving you a rundown of some of the latest moves that hedge funds and institutional investors are taking in their Tesla positions. Now, Capital Advisors Wealth Management, LLC, just bought 1,571 more shares of Tesla. Keep in mind, this is after the stock has rallied. This is really last week they acquired this position, as well as all of these positions. So they're very bullish leaning. Total Wealth Planning, LLC, just bought another 220 shares of Tesla. JGP Wealth Management just bought $723,000 worth of Tesla stock. MGO Private Wealth has bought almost $250,000 more of Tesla. Prentice Wealth Management acquires a new holding in Tesla as well, a brand new position. They just bought 11,000 shares of Tesla. So quite a bit of bullish activity that we have seen as of recently. And again, I do want to point this out for everyone that Vanguard as well as BlackRock aggressively were buying Tesla this whole time as well. As per the latest filing from BlackRock and Vanguard, Vanguard has increased their position 248%. Going from owning 62.5 million shares of Tesla, now owning 218 million shares. That's a huge add. I mean, that's insane. They now own almost 7% of Tesla. And BlackRock went from owning 53 million shares of Tesla, now to owning 178 million shares of Tesla, adding to their position by 237%, now being a 5.70% ownership in Tesla stock. So, well, actually, sorry, these are the numbers that they owned before. Now Vanguard does own almost 11% of Tesla, and BlackRock owns about 7.5% of Tesla. So you've seen a lot of bullish additions that hedge funds and institutional investors have been making. So why are you starting to get downgrades on Tesla? I think it's pretty simple. Tesla stock went from $100 per share to $270 per share in 5 months. It makes sense why on face value, analysts would want to downgrade the stock. But analysts are not good investors. We know this. Retail has consistently outperformed hedge funds, institutions, and analysts every single time. That's because retail buys stocks that they see being bigger in the future, right? When you look to buy a company, the only thing you care about is if that company is going to be bigger in the future and how much bigger could it be. These analysts, they go off of momentum, they go off of price action, but they don't consider The fact that Tesla was at $100 per share off of essentially rumors. There was no demand problem. There was nothing that justified Tesla being at $100 per share. And when you actually look at the charts, Tesla's not even to its August 2022 highs. So I think it's very dangerous for some retail investors to see these analyst downgrades and to go out and make changes to their position in Tesla. That's the last thing that I would want to see happen to any of you guys. These analysts have no idea what they're talking about. You have a better understanding of Tesla than these analysts do. And from all accounts, it looks like Tesla stock is going higher, potentially much higher over the next 2 weeks. Now, specifically this week, it's going to be a big one. Not to mention the data that we're going to talk about, not to mention anything that could potentially happen in our markets, but to look at Tesla alone and see the short position is underwater for all of these shorts, essentially in 2023. They've all lost a shit ton of money. Well, they now have short positions totaling $24 billion. Now, this tends to happen with Tesla is you tend to get a rally the week before a major catalyst. The next catalyst being on July 2nd when delivery numbers come out. That is next Sunday, a week from today. So this week, historically speaking, has good precedent to be bullish. But this time around, again, there's massive short positions. And the last thing you want to do, being a hedge fund that is supposed to be all about hedging and managing risk, the last thing you want to do is be massively short on Tesla heading into a big catalyst. So I think the beginning of the week, Monday, Tuesday, could start off a little bit on the slow side. But I think towards the end of the week, once you get closer to Friday and then ultimately on Friday, you could see some big up days. Now, if the option activity is any indication of where Tesla stock is going, it's much higher. The largest expiration for this Friday by far is the $300 calls. Currently, the $300 calls have an open interest number of 41,000. On Friday, you've seen 46,580 of these contracts trade hands. This suggests to me you're expecting a essentially gap up to $300 per share by this Friday. These are institutional orders that are coming in. By and large, that's where you have seen hedge funds placing a lot of their bets for Tesla by the end of this week. And that's exactly what I expect as well. $300 per share is going to be a very strong psychological level of resistance. I think you trade up to $300 per share, which is only an increase of about 16% from here. And then you kind of find some resistance there. Then coming the following week, if delivery numbers come in, as I expect, around 490,000 deliveries, and you beat that average analyst estimate of 445,000 deliveries, that's where Tesla stock goes to 350 or higher. Do you want to say hi? Come here. Do you want to say hi? Do you want to say hi to everyone? Say hi, guys.
Hi, guys.
Say Tesla to the moon.
It's a move.
All right. If we also analyze the option chain in a little bit easier way to see for this Friday, again, the largest option expiration is by far that $300 call with, again, 41,000 for open interest. For comparison, the next highest expiration or strike is the 270 call, and that has about 13,000 for open interest. So this $300 call has over 3.5 times the open interest as the 270 call. Meaning, long story short, we're expecting a lot of upside this week, as is implied by the options market. As you might know, recently you have also experienced a golden cross with Tesla. This is one of the most bullish technical indicators that can happen, and it's when the 50-day moving average crosses above the 200-day moving average. Over 90% of the time when this happens, stocks go higher from this golden cross crossing, not lower from here. So the odds are ever in your favor, as a bad reference to the Hunger Games would say. But if there's anything that could destroy a rally in Tesla, it's probably the broad markets. We've seen quite a few interesting things happen over this weekend, such as a almost takeover of Russia. That could have been a black swan event. It looks like that is avoided. So I don't know if that's going to give us any real downside from here. Don't expect so. But there's a lot of economic data coming out. And the main focus is going to be on the economy. And then on Friday, it's going to be on PCE data. So let's give you a brief rundown of the economic calendar. If you guys want to watch all of these things every single day, you know, if the markets start to move crazy, you can look at this calendar and see if anything happened or any data came out. Highly recommend you guys do so. Just look up Trading Economics Calendar to keep this on your computer or your phone, wherever you guys would like. You have some bond auctions Monday. And that is basically it. You have a 3-month bond auction and a 6-month bond auction, as well as a 2-year bond auction. Keep in mind, the TGA, the Treasury General Account, essentially went down to almost zero as we almost defaulted. Remember, just in early June, that was a potential crisis. Well, that crisis is over, but what that means is the Treasury has to go out and resupply their TGA by over $1 trillion by the end of this year. So there's going to be a lot of bond selling happening in our markets almost every single day. And this dries up liquidity from the stock market, from the bond market, from money mutual funds, from money market funds, from a lot of different places. On Tuesday, coming in at 8:30 in the morning Eastern Standard Time, you're getting the first big catalyst of this week. And that is the durable goods orders month over month for May. This is really a sign for the economy more than anything else, right? You're expecting negative 0.9%. Last month's reading was 1.1% positive, so you're expecting a deceleration. The S&P Case Shiller home price year over year expected to come in at negative 1.5%. Last month, it was negative 1.1%. So more softening in real estate. That could be good for the markets. And this month over month reading is expected to come in at 0.8%. See right here, we were negative, represented by this yellow in this little chart. You were negative for a long time, and I'll just blow this up so everyone can see. You were negative for a while, and it looks like real estate has actually started to recover quite a bit recently. We'll see if that trend does continue. For Tuesday as well, you're going to get a lot of Richmond Fed as well as Dallas Fed data coming out. This is Dallas Fed Services Index, Dallas Fed Manufacturing Index, Richmond Fed Manufacturing Index as well. These indexes are expected to recover a little bit from their readings last month. Keep in mind, most districts for the Fed have been in recessionary territory. So if this recovery doesn't start happening, if you don't start to see the manufacturing index, the service index recovering, that could be a negative thing for this market. And that is happening on Tuesday, as well as, again, another 5-year bond auction that will be happening at 1 p.m. All of this data comes in between 8:30 in the morning on Tuesday and 10 a.m. in the morning. Now, for Wednesday is going to be the first day we hear from Fed Jerome Powell this week. That is really the big catalyst of Wednesday. You don't have a lot of economic data. Again, you have retail inventories, goods trade balance, wholesale inventories. You have a couple things, but this is the biggest thing that's going to be happening during the trading day. And it's going to be happening at 9:30 in the morning with Fed Jerome Powell's speech. I doubt it's going to be a big event for the markets. Simply put, we heard from Fed Jerome Powell twice last week, and that really didn't give us all too much. So I don't expect to get any new information coming from Fed Jerome Powell. On Thursday, we hear from Fed Jerome Powell at 2:30 in the morning. He's speaking over in Europe. They obviously have their own set of problems over there. Higher inflation. Most of Europe countries are either in a recession already or very close to a recession. So we'll see if he says anything new, but I'm not expecting anything that's going to move the markets. Now, coming in later in the morning at 8:30 in the morning, you are going to get initial jobless claims coming in at an expected 266,000. We have recently seen a jump to initial jobless claims. If this comes in higher than expectations, that could be a real bummer for our markets. Then you're going to get pending home sales year over year, expected to come in at negative 17%. Pending home sales month over month, expected to come in again in negative territory at negative 0.6%. You're going to get a 2-month bond auction, a 1-month bond auction, as well as Fed Bostic that speaks at 3 p.m. On Friday, you are going to get your biggest set of data, and that is core PCE month over month. You're expecting that to come in at 0.3%. Last month's reading was 0.4%, so a slight deceleration in core PCE. Personal income month over month is expected to come in at 0.3%, down from 0.4% last month. Personal spending month over month is expected to come in at 0.4%, a big drop from last month's rating of positive 0.8%. PCE headline year over year is expected to come in at 4.1%, down from 4.4% at the last month's reading. And PCE month over month is expected to come in at 0.2%, down from 0.4% last month. So really, I don't know how these things are going to come out. It looks like core PCE is going to be a lot stickier than what people are expecting. That's at least the Fed's projections. So it's possible core PCE comes in at 0.4% or 0.5%. That might upset some of the market's rally that we have seen so far, but it's truly hard to tell. For a stock like Tesla, though, I really don't expect, considering we have a big catalyst coming on next Sunday, I don't really expect any sell-off in the markets to affect Tesla nearly as bad. Again, shorts have short positions of $24 billion. They're going to reduce some short exposure heading into the end of this week. So by the time you're getting to Wednesday, Thursday, or Friday, it's very likely that you're seeing an upside move at that point. Even if you think a couple $1 billion are going to be covered by shorts as just purely risk mitigation heading into Sunday's catalyst, that's going to send Tesla stock higher. And Tesla wants to be bullish, as you have recently bounced off $250 every single time you have broke under that level. It's very strong support. And you're sitting at $253. So I expect an upside move this week. As the Motley Fool says, Tesla just turned a huge financial burden into a $12.9 billion revenue opportunity. They go on to talk about the deals that we have recently seen with GM, Ford, Rivian, and other competitors to use the Tesla charging network. But they also go on to point this out, which I think is not talked about enough by analysts or investors of Tesla. And quote from the Motley Fool, the company is also vying for roughly 7.5 billion in subsidies offered by the Biden administration to expand its supercharger network if other automakers have access to its system. In all, this amounts to nearly 13 billion in additional financial incentives for Tesla to open up its network. So you're starting to see Tesla valued as different segments, right? Kind of like Amazon and AWS. When Amazon started AWS in 2003 to help them with their internal operations, and they started to license that technology to other companies in 2006, markets didn't catch on for a while how big that potential opportunity would be down the line. And then they started to recognize that around 2009, 2010. And then Tesla's valuation started to be more reflective of AWS and what that would do to Amazon's profits. And this is what you're starting to see, according to Dan Ives and Webush, a valuation of parts of Tesla's business right now. And that is a big reason he thinks Tesla has been going higher recently and will likely to continue to move higher. Last but not least, Mark Zuckerberg's MMA coach says, quote, about Zuckerberg, he works really hard. He's a really nice guy, to be honest with you. I'm not sure how the fight will play out, so I don't want to speculate, but I'm like you. I'm like, How crazy is this? Huh. He says Mark Zuckerberg is a student of the game and said he shows up, trains hard, puts in the effort. Doesn't sound like he's confident in Zuck. And if there's one bullish catalyst for Tesla, it's potentially Elon Musk winning a fight with Mark Zuckerberg. Imagine what that would do to Tesla stock. Kind of joking here, kind of not. I don't know. Let me know if you think Tesla stock would react if Elon Musk won a fight with Mark Zuckerberg. Let me know what you guys think about all of this information. Hit the like button and subscribe to the channel on your way out of this video. If you guys do want to take it a step further and come trade with me live every time I make a trade, link down below in the description of this video. We have something for everyone over there. You can always cancel if it's not the right fit for you, but I think you'll find a lot of value over there, so check it out if you have not done so already. If you have also not gotten up to 15 free stocks with Webull, check that out, link down below in the description of this video as well. It's free money. All you got to do is deposit $1. I get a free stock. You get a lot of free stocks. It's a win-win for everyone involved. But that's it. You guys enjoy the rest of your day, and I will see you in the next one.